Hey, what's up? This is Greg. I wanted to do a quick update on the market action today. It was really incredible, and the day started at 8:30 in the morning with the CPI report, which came in at 8.6%, which was higher than the market expected. The market expected in some corners for that former 8.3% CPI to actually go down along this, sort of peak inflation concept, which I've disagreed with for a while. But instead, CPI went higher. But the real shocker and the thing that really freaked the market out was that consumer confidence, which was hanging around at very low numbers, declined to 50, which is basically the lowest number ever. Okay, ever in history. That's consumer confidence. And in fact, the Fed has never tightened credit with that number being below 60. So this was unprecedented, and it really freaked out a lot of people in the market. I continue to believe that inflation is actually going higher. Some people were talking today about it going to 9, I think 9%. I think that's very possible. We are just in a complete shit show here with inflation, with the yields in the Treasury market. The other thing that happened that was very interesting and caused a lot of sort of program selling was the 2-year in yield is over 3%, basically matching the 10-year. And what that indicates is that we're probably going to have an inverted yield curve pretty soon here, which indicates as a consequence of the inflation, which indicates a potential recession. Now, I think, quite honestly, and I hate to say this, but I think we're already in a recession. Last quarter, you had a negative 1.4% growth. If you have negative growth this quarter, we're going to be in a recession. I think that's very possible. The other two technical indicators that I'm keeping my eye on rather, is a lot of people on the S&P are looking at 3,800 as a technical support level, and in the QQQ, the 280 mark as being levels that, if those marks are levels are penetrated, we could be in for a real massive sell-off. Again, another thing that I look at very carefully is the VIX. The VIX was up today. Last I saw it was around 28. That was up, but it's really not at crazy levels that indicate really panic selling, or really the kind of washout that you would like to see to indicate some kind of a bottom. The Fed continues to be massively behind the curve. I don't know what these people are thinking. The only explanation is they really don't know what to do, because I read the other day that they're looking at unwinding the money printing, the 120 billion a month where they're buying securities. They're going to start on. I thought they had already started unwinding it, or had stopped it, but I read that they're not stopping it until July. Like, I don't know what these people are waiting for. I mean, how many more indicators can you see that that everything's going to hell in a handbasket here with respect to inflation, and it's just a matter of time before you see insane demand destruction on the demand side with the rising prices, and there's just no explanation for what the Fed is doing. If I were running the Fed, which of course I'm not, I'd announce a 75 basis point rise like tomorrow, instead of this incrementalism, and the glacial pace at which they're moving is really not warranted by the current situation that we find ourselves in. It's really a remarkable situation. All I can do is just shake my head and and just marvel at the level of incompetence, like all the way around, at dealing with this. I think the something to keep your eye on also is what's going on in Europe. The ECB has been even more behind the curve than the U.S. Fed, and they're really completely out of it with respect to what they're doing. But then again, their whole situation with printing money and buying the sovereign debt, that's a Ponzi scheme, which once they stop doing that, if they do in fact ever stop doing that, you're going to see severe financial consequences to that with the lesser credits like Italy, Spain, basically the pigs, Italy, Spain, Portugal, etc. So this is a wild time, people, and you know, most people alive have never seen a situation like this. You have to go back to the 70s to see anything close to what we're seeing today. So stay tuned to this channel. I'm going to try to keep you updated with what's going on. I'm going to try to do sort of a market update on Fridays, either live as a live stream or as a recorded update such as this one, and it will depend on my schedule and my ability to do that. I'll try to do it every Friday. I'm going to try to stick to it. So stay tuned to this channel for market updates as well as general advice and analysis with respect to specific investments and how to protect yourself in these trying times. Really the only way I think you can protect yourself in this kind of a market is to increase your cash levels and be heavily invested in energy. Okay? Well, thank you for watching, and as I said, I'll try to keep you updated. And for now, it's Greg out.